and welcome to our weekly look ahead at the markets here. And quite a week it's been, if you recall. Last Sunday night we had Credit Suisse being bailed out by arch rival UBS. That seemed to assuage market concerns about wider banking stress. We did see continued volatility in lots of the banking names all throughout the week, but there wasn't that same sort of heavy pressure that we thought we might get Monday morning when we did see a steep sell-off. By Monday afternoon, things had recovered, and through Tuesday, we saw a big bounce. Then, of course, we had the Federal Reserve, which hiked interest rates, and the market sold off after that one. The Fed, though, did say only that some additional firming in monetary policy may be warranted. It wasn't pinning its colours to another rate hike as such, although the dot plot does suggest maybe one more hike. And then cuts coming in 2024. That's what the dots suggest. That's what the market is betting on. We shall see. The Fed did signal that it thinks that the sort of crisis, if you like, if you want to call it a crisis, maybe a situation, the banking situation that we've found ourselves in, will lead to tightening. They say they don't really know how much tightening has happened. They're not really sure how much is going to come as a result, but they think probably that will do some of the work for it. I think the uncertainty over that is a sign that the Fed is a bit worried that there could be some further stresses down the line. And then by Friday, we saw further stress in the banking space with Deutsche Bank coming under scrutiny. It had sort of avoided much of the heavy scrutiny as it was focused on Credit Suisse, but by Friday we did see CDSs blowing out, bonds falling, and the share price tanking as well, down about 12% at one point. And the mood is still very much one of a market that is searching for its next victim. There's a big snake out there, and it's trying to find its next victim, and it's not going to be happy until it does. That's the sort of feeling that you have right now, and so that's why risk is still looking a bit tentative. Coming up this week, it's all about the inflation numbers out of the euro area. We've got the German, French, Spanish, Italian numbers coming out later in the week, and also the Fed's preferred gauge, of course, the core PCE index. That's going to be watched for signs of any further cooling that could allow the Fed to take its foot off the pedal. If it does re-accelerate, though, as we saw in the UK, then the Fed will be pressured into yet another hike in May. So all eyes on that inflation data, and then of course just keeping an eye out in the banking space, what's going on there, what sort of signals are coming out of the Treasury in the US, what the EU and the ECB are saying about it, and what might happen to some of these regional banks in the US. That's it for now. Thanks for watching.